This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. This is, as we know, a nonstop rally. In other words, I still have that SPX 7190. We likely tag. We've got Milton Berg out saying much higher. Tom Lee follows the mid-year election cycle playbook that I talked about on Monday morning, which is a pullback of 18 to 20% on average, and then a move higher from there of 33 to 35% on average. Anyway, the point is, many are not expecting a pullback. The war is priced in, which makes no sense at all. I have obviously this post up here, tweet from X, that I thought was really saying it. Everyone is saying that they're confident that Trump will taco, and we have an overheating economy because of stimulus and Warsh coming in to do rate cuts. That's about the intent, not necessarily the follow through with a non-consensus Fed. But regardless, retail sales have been stalling for months. And that was kind of the point of this tweet that I liked to kind of highlight that underneath the surface, we still don't have any de-escalation in Iran. For reality's sake, we have a lot more sticky oil prices that will feed through into the economy, into the global economy. And we still have this short covering rally that turned into excitement over AI earnings and basically stabilization from this fundamental take that earnings are going to grow into the sky nonstop. But the reality is we really have not had any follow through in retail sales. And that's one kind of idea of, maybe the consumer isn't as healthy as the market is pricing in. And more importantly, we will have a lot of follow through hit on this consumer spending and disposable income as oil prices stay very, very bid. So yes, we've had a very strong bull market thrust by all accounts. We have not actually escalated yet with any war vibes, but they are coming to a theater near you. Red Sea cables are threatened by IRGC to be cut. 95% of internet and data center, especially in the Middle East, would be disrupted. And we have Iran basically saying, if you do not calm down here in your escalation threats, then we are going to hit these highly vulnerable parts. And the CTAs are just about done buying. So that particular thrust of mechanical buying is going to be petering out very, very soon. Got to keep that in mind. And we have Warsh nomination coming in, et cetera, et cetera. But that's not going to be a fait accompli with monetary easing right out of the gate. And long story short, I just see lots and lots of escalation picking up very, very soon. So full scale escalation coming in exactly when everyone has covered their shorts. And we had heavy, heavy short interest. And then the CTAs, heavy, heavy, heavy buying. Now we have what's coming into a theater, I think, anyway, of kind of this seeking safety with the herd mentality is going to meet a fragile upside. So the fragile upside doesn't have a lot of support in pushing it up and over if mechanical buying slows significantly. And I can see obviously that kind of May, June timeframe getting a little wonky. And maybe the history will repeat with the drawdown as the mid-election cycle kicks in. In the meantime, the war is definitely not over. I think I also posted a worry. At least I thought it was a worry. Let's see. We've got 3 U.S. aircraft carriers that have come into the region. And let me just get to the pre-market heat map so we can deal with that. We have got threats of the Red Sea. Well, we talked about cable cutting by Iran. We've got lots and lots of carrier strike groups in addition to jets and missiles and destroyers and nuclear submarines and military personnel all over there. And the Secretary of the Navy just resigned after being threatened with firing. So yeah, we've got a lot of folks that are in position for attacking Iran and escalation that is not being priced in. So kind of keep that in mind. At the same time, Besant is posting that we will have a very friendly US dollar swap with the United Arab Emirates. And just to give you a little background here, the UAE Central Bank has more assets than our own Treasury Exchange Stabilization Fund and more T-bills. Not a joke. Yep. So we have just promised through the U.S. Treasury Department to backstop the UAE with dollar swap market shenanigans. And this is, I don't have access to the New York Times, but Bessent backs financial support for oil-rich UAE. All right, so that's what's going on. And why? Why? Because they don't want the market to be interrupted. Bessent doesn't want the UAE to sell any U.S. assets, dollars or treasuries. So this is what's being finagled behind the scenes also to keep the market from selling off. But that's it. I just wanted to kind of give a little overview of what's going on with the politics, as well as the military buildup, as well as May coming in very fast and furiously after this week. I think we'll see some selling and some digestion on a full-scale escalation in the Middle East. So in the meantime, make hay while the sun shines.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.